Hey everybody, Stracks here with the Hockey Wealth Group on Monday, October the 30th. I hope everybody's doing well. Hope everybody had a great weekend. We got to take Rory, a friend of ours, let us know that in their uh, town, their local firehouse was putting on this kind of early trick or treating slash tour, and Rory did refuse to put on his costume, but did participate in the games, the trick or treating, and then especially loved the actual fire trucks. I had to physically go in and remove him from one of them because he refused to come out. He liked them so much, which was a lot of fun. One of the things I wanted to talk about, obviously, right off the bat today, was just I wanted to acknowledge the tragedy that we saw happen over the weekend over in England. Adam Johnson, to lose this young hockey player, American-born guy, played in the NHL, AHL before going overseas, and then he's playing in that English league that I ended my career in, and obviously just one of those freak accidents that is terrible. So I wanted to just talk about that off the top. Obviously send out my thoughts, feelings, prayers to his friends, family. Everybody involved in that, as it is just absolutely terrible. So last week, we saw the GDP number come out, and that headline number, again, kind of better than expected. I think if you watched last week's video, I talked a little bit more about some of those underlying economic numbers. Maybe they are not quite as good, but again, that headline GDP number continuing to be strong, and come in better than expected. A lot of earnings, just with reaching end of Q3 here. A lot of earnings coming in, and for the most part, they have been all right. So businesses kind of battling in this high rate environment are continuing to keep those earnings coming in. We saw Google, which is owned by Alphabet, so the Alphabet stock, a big drop in that 7% on its earnings report. So that was one kind of outlier. But even that, when you look at the actual earnings report, for the most part, had some really strong numbers. Just it's such a big business. It was one particular aspect. It was their cloud part of the business that missed by a pretty good margin. We saw that drop, but again, at this kind of stage of where we are in the economic cycle, rates being as high as they have been for this amount of time, you're going to expect to see this kind of volatility right now. The longer end of that yield curve we keep talking about has continued to come up, which obviously, going back, we've had a stretch of tough years for fixed income. 2022, obviously the worst year ever for bonds. But realistically, just right now, the way things are with that longer end of the yield curve coming up, we're in a unique situation where that kind of short to mid-term fixed income is setting up, really, really nicely. We did see again. So looking back last week, U.S. equities down a couple of percent. So that puts the S&P about 10% down off of that kind of midsummer high that we've seen. So we would call that kind of, correction mode. Johan spoke about it this morning. Morgan Housel put out a really nice paper, this data sheet, talked about over the last 100 years, the U.S. equity market has averaged a 10% decline every 11 months. So obviously, you don't set a timer, set a clock, and say every 11 months it's going to happen. You don't know when those 10% declines are going to come in, but you're talking about over a 100 years of data, every 11 months on average, there's a 10% decline. And over that same 100 years, essentially, US equity markets have averaged a 10% positive return each 12 months. So very, very interesting, but definitely, we talk about a lot. The financial media, they are just doing their jobs. But when those kind of talking heads come on, talk about, they're expecting to see this 10% decline. It's always, a little bit more amplified, talking about, worried about this and that, right? To try to sell advertising, sell everything that they can. So, realistically, when they come out and say that they expect to see a 10% decline, they should just say, we expect things to be normal. Because, like I said here, as we've seen over 100 years that we're going to see those 10% declines quite often, averaging at least once a year. So this week we're going to see the jobs report come out on Friday. A lot of people excited and interested to see that. We're kind of waiting for those numbers to, wane a little bit, right? Because that's the Fed is, still left it on the table that a possible rate hike still there, keeping rates high, for now. Definitely waiting. We've got those kind of inflation numbers definitely down close to where they want, but this jobs numbers continue to keep coming in strong. So everybody's interested to see what happens on Friday. And then this week, we're also sending out our client appreciation event invites. So our hockey game client appreciation that we do once a year. This year is the first weekend there of December. And just the way it worked out this year, the games are on a Friday and a Sunday, not Friday, Saturday. So look for those invites soon, and I hope everybody has a great week, has a fantastic Halloween tomorrow, and maybe I'll share some pictures of Rory. Hopefully he puts on his costume tomorrow.